Good morning, everybody, or good afternoon. Welcome to the TraderMerlin show for your Wednesday afternoon edition. Time is absolutely flying, and so are these markets. I'm loving it. Hey, good to see everybody. So we got the usuals are here. Probably excited because the graphic I used for today said market breaks down, and of course, as you guys know, I've been looking at specific levels on this market as kind of confirmation that we are potentially making some new lower lows. We never know for certain, but all of a sudden we had some nice breaks today, which means I'm rubbing my hands like Gollum right now, loving the short positions. I have not liquidated any of them. I was actually about to add some more shorts today. Did a little bit of stuff with options on the silver position, but all in all, we are keeping our shorts long and strong as the uncertainty from global markets goes on. That was somewhat poetic, wasn't it? Anyway, welcome everybody. Hope you had a great trading session and made some money out there. Let's start things off by looking at the big picture. Now, of course, when I posted market breaks down or markets break down, look at a lot of red. I mean, tons of red here. Certainly, actually, crypto was actually okay today, but you look at the NASDAQ. We'll start at the lowest point here and work our way up. This is why I'm so excited. We talked about, when do things change? When does it all reverse? It may never reverse, right? And there's some people who are permanently bullish. That's fine. I tend to be on the side of almost permanently bearish. But it's really about waiting for confirmation for me to do anything heavy. And when we look at the long-term picture here, we have had a couple of points where it's made some new lows. So you could look back at 2015. You can see we sold off and made a new low on the NASDAQ and then proceeded to make some new highs. Fine. Same thing back here in 2018. We started to make some new lows, broke down below the lows from February in 2018, and then all of a sudden ripped up to some new highs. Then, of course, the sell-off in 2020 because of COVID, and we haven't really stopped since. This is the first time we've actually started to make some significant new lows on the NASDAQ. And there's that break today. We were looking at about 13,717 was the low that we saw on the 21st of January. And today, we were chopping around and then just ripped through that to the south side, which to me starts to strike fear in the marketplace. And I think you're going to continue to see that going forward here as we start to make some new lows. So this was really the best piece for me. If I go out to, let's say, a 15-minute time frame, you can see that the momentum, even though I thought it might pause, it did hit there and bounce off. But now it's just ripping back down through it even stronger. So this is a pretty good sign for anybody who's bearish. If we get some follow through over the next few days, we could really see some big declines in these markets. So NASDAQ down 2.71. That's including the after hours right now. But all in all, the picture isn't even that grotesque. It's just starting to look bad, right? All I was waiting for was to make some new lows after we could not make a new high, and all of a sudden this starts to look better and better and better. So, I don't know which way it's going to go. Obviously, my chips are pushed more towards the short side here with the put positions I have. And today was certainly a very good profit day, we will say. Now, as far as S&P goes, I'm loving this picture. I know it probably looks annoying to some of you who might be new to the program. I have diamond puts. Some of you might be new to the program. You're looking at this going, this is kind of like cheesy artwork. Well, hey, you know what? As long as it's following this picture, I'm sticking with it. And right now, it's looking pretty good. We are right down to the level that I'm very concerned with. And I mentioned the 4,200 on the S&P is that level I'm looking at is one of those, my old friend Sean Kim used to call it the puke point. That point where the market just says, I'm done, I give it up, and we see big declines. So while the NASDAQ was great for making new lows today, this is the one I really want to see break down. And the low that we had back on January 24th on the S&P was 42.12. Right now, we're at 42.15. So we are just about dead on that low that we established back in early January, which to me makes the neckline of this head and shoulders pattern. If we get a break, expect momentum to pick up. My guess is it's not going to be a straight shot like this candle, the line I have drawn here. Let me do this. I want to put it to where the expected target is, and maybe we'll just zoom out a little, and there we go. So if you do a true measured move, right, and what a measured move is it goes from the top of the triangle to the baseline. So it really should be there, right? The measured move would be there, and that means if it breaks, we should see price come all the way down to right around 30, call it 3,700 on the S&P, which is a decline of roughly 12%, which is really not that big a deal. I mean, 12% isn't really the end, but I don't think it's going to look like this line. It'll probably look something like this, right? You'll probably see it drift down if it does. We'll have some sharp down days followed by some retracements, kind of like we see here with this decline that started in January. Sell off, rally, but it doesn't go back to the highs. It'll make a new low, rally, not go back to the previous highs, and so on and so on and so on. So at this point, I'm fairly optimistic. Congrats, Big Eb. I says I was close to taking profits on my puts today. Oh, I thought you said, okay, cool. You're still in. All right, you and I are still got the seatbelts on, ready for the roller coaster to go off that cliff, is what I'm hoping for. So this is exciting stuff. This is the reason it's so exciting, though. It's not that, hey, the markets are going to potentially sell off. For me, I think that the vast majority of people haven't shorted the market. They haven't, experienced a prolonged bear market other than maybe a month that we saw back in 2020. So I'm kind of looking forward to a prolonged one to see how it shakes out the market, right? Who survives a big bear market. Back in 2020, the vast majority of people that I knew that were killing the market, making tons of money in that bull market rally, most of them disappeared in that bear market cycle of 2000. If you look at the same thing in 2008, you might know a lot of people who were just loaded to the gills with cash in 2006, 7, and 8 because the markets were really robust, and all of a sudden, 2008 evaporated their account. So the key is to make sure that doesn't happen to you, whether that's to go to cash or do protection, whatever. Just don't get stuck in the mindset of it's always going to go up. How does that measured move look on a logarithmic chart? Well, are you and Tom dating? What's going on here? Tom loves the logarithmic charts. I generally don't. Oh, it actually was on logarithmic chart. Yeah, it was on logarithmic. I normally don't use logarithmic, but let's see if it gives me a different number here. Boom, to the neckline. See if that's any different. It's a little bit different. It's instead of being 3,700, would have been 36. So, yeah, a measly 100 points, right? I'll actually keep it there because I generally don't use logarithmic. Sorry, Tom. That's I know you love logarithmic, but it's just not something I normally use. Not that there's anything wrong with it. It's just if it ain't broke, don't fix it. So I'll put this line there. So all we've really done, guys, is we've modified the angle of the break. I have not modified in any way these pieces on the top portion of it. So there we go. Hopefully that fans of Kramer are still long. Oh, fans of Kramer are going to be broke. I see a bunch of you have been sending me links about some people doing Jim Cramer inverse portfolios and maybe some talk about a Jim Cramer inverse ETF. That would be awesome. An inverse ETF of Jim Cramer would be so cool. So we are just on the second from the bottom. That's NASDAQ. We went to Russell. As you guys know, I'm still in 35 on the Russell puts. S&P puts. I'm in 50 of the Russell, which surprisingly looks strong. It hasn't made it back to these lows. And those lows go back to January 28th, so not that long ago. And the low was 1892, and we're at 1940 right now. So we're certainly headed that way. Normally the Russell should be leading this, but it's not. The weakest right now is technology. S&P is nipping on the heels because it's at the lows, and then the Russell is doing slightly better. Now, that was down 1.97, so pretty much mirroring the losses of the S&P today. Here's your Dow. So Dow also... Notice it's like to the penny on the line right now. So the low we had for the Dow Jones Industrial Average, for the futures anyway, on the 24th of January was 33,031. Right now we're at 33,040. We did get below that and made it to 33,015. Bottom here, right? Logarithmic scale. Bottom line is this is pretty weak, right? For the Dow, again, you want to close below this line, this horizontal piece. So let me just move this line down to make it fit. There you go. You want to close below that blue line. That's really what would be your trigger. We haven't had one since 2021, right? Went all the way back into, looks like March of 2021. So it's been almost a full year since we've seen a breakdown below 33,025. Once we get below that, I think you'll start to see momentum pick up. We've seen that slow down because of this curve. Of course, I've been talking about it for the last couple of weeks, and all in all, things are looking good. Now, we'll move up a little bit here. It's still negative on the day, and again, I'm still bearish on Bitcoin. Today was just slightly down at 0.95. The only reason is I'm bearish until we get something from Biden. This executive order has people freaking out. I think a lot of people are confused and scared about it, so they're just saying, let me lighten my portfolio with regards to crypto. and you look down here, there are a couple that are moving up nicely, but we saw an about face, and there's quite a lot of red, 4 or 5% decliners. A lot of these are in my portfolio. This is the one that really is surprising me the most, actually, is Polkadot, which has gone from 55 now down to 16. Yeah, not feeling great about that one, but that is one of the bigger losers in my crypto portfolio. So last two, we've got gold. Here is GC. Now, the gold futures, we talked about that breaking out and going right into the next supply zone yesterday. It kind of hesitated there today, which I'm fine with. I don't really hold ETFs. I have physical gold. What I do own, though, is silver. Silver had a great day today, up 1.88% to 22.73. I sold the 2350 calls today, which was nice. I pulled in I have 3,200 shares of SLV, pulled in another grand just for until the 18th, with basically committing myself to sell if it gets to 2350. So nice generation of a little bit over 1.5%. So that was nice with regards to silver today. But notice, if you are the silver trader, we are coming right into this overhead supply. There we go. Just do that. Makes it a little cleaner. We see the supply level on silver that goes back to January 20th, and you're in it right now. I do think, as I mentioned, that we're going to get higher on silver, but if there's going to be a hesitation, it's going to happen in the next day or two just because of the supply zone we ran into about a month ago. All right, and last, but definitely not least, crude oil. Now, crude oil is probably the only one that doesn't have a story to tell. It looks more like just consolidation, a little bit of choppy back and forth. It was up 0.36% today, but technically, did it do anything? Nah. Just looks like it's just putzing around. So nothing really to say on crude oil at this point. I still am bullish on it. I think you're going to see it dip back down, saw it dip back down to our area we mentioned a couple weeks ago, which was 88.25. Broke below that a little bit, but didn't close, and now potentially on a leg to some all-time highs. So we'll see, not all-time high, but to break this most recent high of 96. Woo! Lots of stuff there. Sirach Noah says, recommend buying the dip on growth companies we believe in. At these levels, some stocks like Planterra look good. Well, this is the big challenge for anybody who's a trader or investor. You've got a market that's up 600% since 2009, 600% in one of the most abnormal looking charts on a long-term scale. Whether we switch it to logarithmic for Tom and others, doesn't matter. It still is the biggest bull run we've ever seen. And to say you're finding good value at this point, that's a challenge, right? Because not everything, the vast majority of things right now are overpriced. And they're overpriced due to expectations that we're going to see continued stimulus, more government intervention. At some point, though, that the ball will drop. At some point, you're going to see that back out, and all of a sudden, my recommendation is to not buy these dips right now. My recommendation is either to be potentially building short positions and keeping some powder dry, but more importantly, keep powder dry so when we do, and as I said when, not if, it's just a when we do get our 50% drop, which could happen this year, could happen, who knows, it's going to come at some point. I just hope I'm loaded to the gills on puts with it. When we do get our 30, 40, 50% decline, then you can come back in and say, okay, these things are now 50% off. Now I'm liking it, and I'm still going to operate under the assumption that it could fall even more, but at least knowing I'm buying an ETF 50% lower than its all-time highs is probably a safer bet than would be buying something like an individual security. Now, I could see you were mentioning, PLTR. All right. You look at something like this, it's down at $10 and its all-time high was up around 45. Well, you know what this chart tells me? This chart tells me it's going back down to where it started from, which is going to be in the $9 range. It looks like it's going to keep going. Does that mean it's never going to rally back up? No. But if the market hasn't rolled over, and this is where I think we run into problems. If the market rolls over, remember, market has not rolled yet. It's just started to roll, but Planterra already looks like it got beaten with a stick. If the markets tank 40% from here, what's Planterra going to do? They're going to have all of a sudden a big bull market rally, even though you might think it's a good value stock, right? There still is danger here because the landslide is not Planterra, or Palantir. I always call it Planterra, but the landslide won't come from Palantir. It's going to come from the Russell, the S&P, the NASDAQ, right? And of course, it's getting brought down because of its technology, but if these things really do move, and let's say we get another 15, 20% slide from here, there's no way that PLTR is going to have all of a sudden a big rebound. So I'd be careful buying dips at this point. When you look at the big picture, you got to, as a surfer, TJ, who was the chart master for Power Trading Radio years ago when we did it at Online Trading Academy, he's a professional surfer. And what made him so great is not only his ability to ride waves, obviously that's what's important, but if anybody here surfs, one of the biggest skill sets is to build the ability to look out at the ocean and say, I'm getting in it or I'm not. And that has all to do with the wave structure, the time of day, the tides, all these different things help. And, if you go to the beach, from my experience, it seems like you see a lot more surfers when tides are going out because the waves get bigger. And you see no surfers when the tide is coming in because the waves aren't as big. Just seems to be a pattern I see every time I go to the dog beach. And if we can do the same thing with equity markets and say, which way is the tide going? In this case, it looks like the tide is going out. So, obviously there's trades to be made, but the risk is we want to make sure we're on the right direction of that trade if it does continue to pick up. What else? At least PLTR owns $50 million worth of gold. There's always that. TJ thought he was a cowboy. No, TJ not a cowboy. You know what? Like, you listen to his music, Big Eb. If you guys get a chance, check out TJ Writings. He does. I think he's just on. I think he's just on Instagram. TJ Writings, just a great musician, great guy. He used to do all the switching for the show and help me with all the production pieces. Now, he kind of comes across as a cowboy. He's got a twangy, he's a musician, got a new album out. It's pretty good. Very, very mellow, laid-back stuff. I like it. But no, he's a professional surfer, man. It's awesome. So, what else do I got? About 1,900 calls expiring January when it was. I believe in Microsoft, NVIDIA, and AMD. Not much else right now. And again, we have to make our own assessments of what we want to buy into. I mean, a lot of people talking about Facebook. Again, I'm kicking myself for getting out at 252. This thing's down another $60 from where I got out. Are you kidding me? Son of a biscuit. What are companies that people believe in? I guess you have to understand the product. You have to understand what they're doing, their business model. Microsoft, I wouldn't bet against Microsoft. Microsoft actually is at a pretty interesting point right now where you would expect there to be a little bit of a bounce. You can see it's right now trading at $280, but that's the low that we saw back in September of last year. All right, so yeah, Microsoft, I think NVIDIA is one of the great ones. I think NVIDIA is just going to dominate. In a couple years, you won't even know AMD who and Intel what. It seems like Microsoft or NVIDIA just dominating that space. AMD, it's really interesting. If you go back 10 years, nobody thought, everyone was like, AMD, they're a joke. It's Intel. Intel's it. And it seems like that is reversed, and all of a sudden it's like AMD is the real deal. Intel? Who knows? All right. So that's my overall thoughts on the market. There's a couple things here that we could probably point out. You notice that the VIX has been rising steadily, which of course means people are going more for protection. Now, this is one argument that I would say leads to a market bounce up, not down, but a market bounce up, because the more people that are seeking protection, the more likely the market's going to go the other way, right? Because the market's going to want to make those options expire worthless. So the people who are buying puts today, are most likely not going to get a big continued move down in the market, right? The more you buy puts, the more likely the market bounces. Just the nature of the beast, unless it becomes something unstoppable like you saw right here when that huge surge up. All right. Oh, yeah, you watched Shin Lim yesterday? Did anybody else watch Shin Lim? I've seen some of his stuff. He did one with Jimmy Fallon. Watch the one he did with Jimmy Fallon. I love card tricks and magic stuff, but when you see I have no clue how this guy does some of his things. And most magic, I'm like, okay, I know what you did. You're counting cards. You're doing this, doing that. Just entertain yourself and watch Shin Lim. I actually want to go to Vegas and check him out. He finally got a show in Vegas, which he very well deserves. All right, so that was the VIX. We have a couple other pieces. The dollar index. I don't know where my DXY disappeared from. It's weird. Some of my quotes disappeared. I guess I hit the wrong buttons today, and we'll go DXY. And it should be under index. Yes, dollar index. Perfect. Well, that should do it. So here's that dollar index, and I was actually really expecting more follow-through, more bounce to the upside. It's still moving up, but it just doesn't look that strong. Still bullish on the dollar. There's no argument about that, but I just wanted to bring that one up because that's been one of my talking points for the past couple weeks has been what's going on with the dollar index and its potential to drive these markets. And again, the higher that dollar goes, the more likely we're going to see the markets sell off even further. Oh, hey, awesome, Jay. Let me know how it is. I always have a weird, going to see a sleight of hand magician in a stadium environment just doesn't seem to do it. I need to see like his hands up close, but yeah, he's pretty phenomenal. Let's see, Joe. Joe says, I was thinking of buying more shell options with a strike of 52, June expiration. Am I looking at it right? Oops. 1 second, let me get Shell up there. I gotta get the new one. It's Royal Dutch Petroleum is really what you're looking at, right? So buying some more call options. I was thinking of buying more options. So when you say options, I'm assuming you're talking about buying call options or buying puts. I'm not sure. I mean, you could go either way, but you said 52.50. So here's Dutch Royal Petroleum. I'll put a horizontal line at your strike price, which is 52.50. So you are just pretty much at the money right now. All right. I guess it all depends on where you think this thing is going. No, I don't know what the premiums are, but if you're looking at, you believe that this thing's going to continue to move up, you could be buying some calls or selling some puts. If you think it's going to be heading down, well, you should be buying some puts or selling some calls. It really depends on which way you think it's going to be going. What is the typical timing on the VIX move up and the market moves up to crush puts, days, weeks? I don't know, Tom. I don't have the historical memory of that. It always seems like when you have everybody rushing to get something, it always goes the other way. So I don't know. And unfortunately, I don't know the timing of it. My guess is we'll probably see a follow through for a couple days to the south side in the equity markets, and then a bounce up, which should force a lot of people to close their put position. I'll keep mine because I got all the way until May. And then once those options get closed out, then all of a sudden they go down another leg and basically force people to be getting out of those puts. Let's see. If I buy directional put options, once it hits bottom, it will be expensive, but that time will somebody buy that expensive on my put? So if I buy directional put options once it hits bottom, well, you don't want to be buying directional puts if it hits bottom, right? So if you're thinking that I'm going to buy the bottom here, and let's use NASDAQ for example. If you think that this is going to bottom out right here, you're not buying puts. You don't want to buy puts if you think it's going to go to the upside, right? There will almost always be a buyer or seller for some of these options, right? Some will not, just because they're illiquid securities. There's just not a lot of liquidity out there. But for the most part, you'll always have buyers and sellers. For example, today I sold some puts on XLY. Consumer discretionary. I sold some puts on XLY today, and there's my 155 strike price, which means it would have to fall another 9%. It's actually started to fall pretty aggressively since I sold them, but I'm believing that this is going to continue on down here and head lower. So I'm okay selling puts because I actually wouldn't mind owning at 155. So let's schedule a bounce for Friday. I'm going to pull for no bounce on Friday. By the way, no show Friday. Sorry. I got 7 more bikes I got to go pick up. I know. Don't hate me. Priority. All of a sudden, I showed these new bikes to people, and next thing you know, I had like 7 orders within 10 minutes at a brunch on Sunday. So I'm going back up to Los Angeles to buy some more bikes. And then I'm done. No more bikes. So I won't be doing a show on Friday. All right, so hopefully, Nayama, that makes sense. Hopefully that makes sense to you. You shouldn't be trying to buy directional puts if you think something hit a bottom. So let's assume you think that, I don't know. Let's see, what's something that's cratering right now? Not platinum. Now this looks great. Let's go into, all right, so here we go. Let's just say you're looking at Loopring, right? This is a cryptocurrency. So if you look at Loopring here, let's say you thought that this was the bottom. You would not be buying puts. You'd be actually looking at buying some calls because you're expecting it to bounce up. Again, it's just about market timing. Where are the picks of the bikes? I can send you picks. I know, Gallo. I know. It just happened real quick, and all of a sudden they have them in inventory. The last time I ordered these bikes, it took like 3 months to get. Yeah, I actually thought about buying a container of these bikes. It's just crazy the deal I got the first time. These bikes right now down here in SoCal are retailing for $2,000, and I got them for $800. So I actually thought about getting a warehouse and just buying 170 of these things, but I just don't have time. I barely have enough time to do the normal things in my life. Sell the bike business. All right, so what else did I have? Oh, and time-wise, how much time do I got left? 30 minutes. Okay, so I want to go to a question, and I kept this one anonymous. Again, thank you for all the feedback. As you guys know, I appreciate the comments and questions that you put down below the YouTube video. I think that helps me out from a search engine perspective. This one was sent to TraderMerlin@gmail.com, and it was more personal, so I just kept it as anonymous because sometimes if you ever send me something that you don't want me to mention your name, just say, keep it anonymous, and I will keep it anonymous. But this is an interesting one. I think many of you might have the same question as well. So this is from Anon. Basically, he started talking about traders and success ratios and, the ups and downs that he's gone through. Says, my question is, how often, really, do you lose? I'll start right there. I lose all the time. There's no candy coating it. You can go to that jackass trader out of Chicago who, for me, I believe he's a complete and utter liar on every front. A real trader loses a lot. It's part of the game. You lose. It's like saying, how many times you hit a stop sign? If anybody says they never hit a stop sign or a stoplight, they're lying. It's not possible. I lose all the time. And the question isn't the amount or percentage of losses. Certainly that's something that I evaluate. But it's more important is how big those losses are. And, there's an old thing that OTA, actually I built it for OTA many moons ago. But let me see if I can just draw this one out for you because I think this will help establish kind of the foundation of this discussion. Let me real quickly create this and I'll show you. Okay, so we got that there. Here's my new slide. And where's my pen? There it is. So let's just do a real simple math equation here, right? And let's see, where's my cursor? There it is. So let's say we're looking for a 3-to-1 reward to risk ratio, right? That's what I stick with, and I think most people should aim for that. That means that if this is my zero line, right? So that's zero money. And let's assume if I say 3-to-1, of course we need to adjust it for the position size and all that stuff. But that means for every $3 I'm risking, for every dollar I'm risking, I'm trying to make 3, right? So what that means is, let's say I open up my first trade and I take a loser. Boom, I got my little loss right here. Okay, I lost 1. This is a loss of 1. And I lose again. Boom, I've got another loss. I've now lost $2. I could, on my next trade, let's say I hit my 3 winner. So I have failed. I failed 66% of the time. In this scenario right here, I failed 66% of the time, and I'm still making money. Because you can see this, I've only lost $2, but I've made 3. So I've made $1 and I've failed 66% of the time. But that's not the big part of the story. The big part of the story is if you're smart, if you are disciplined, if you have good risk management, this will be a floor for you and it will never be breached. However, this 3 could turn into a 4, could turn into a 5, could turn into a 100 if you manage it properly. So really all you need to have is one nice winning trade to erase a bunch of losses. So, I'm one that likes to keep my losses small here because I've had too much experience where you let like 1 or 2 big losses in here like this. Let's say I have a 3 loser. Now look how much ground I have to make up to get back to even. So as long as you keep those losses small, that's really more of a telling story than how much you lose. I mean, how often you lose. It's okay to lose all the time. I know it sounds weird. I think what the big challenge that most traders are going to have is the psychological aspect of it. Like, how do you condition your brain to be like, oh, I lost again. Fine, no big deal. Well, again, it's just like, how often do you... I admit it, I'm a bit of a road rager, so I probably rather have an electric bike. But if I'm driving on the street, I think I've counted out there's 10 stoplights between here and my office. I have had it where I've hit every green light along the way, and you're just like, this is awesome. We've all been there where we just kind of look at each other, you look at yourself in the mirror, and you're like, man, this is great. I'm going to go buy a lotto ticket. I hit every green light today. There's also days where you hit every red light. And in trading, it's up to you how long those red lights are going to be. Now, there are guilty parties here, right? I'm fairly sure that there's some guilty parties here who have set a stop loss. You open up the trade. You're like, okay, I'm only going to lose X amount. And then it gets down there and you pull your stop loss because like, nah, you know what? I'll just do this manually. It's just, I know it's just another 10 cents. It's just another nickel. It can't do this. I know it's going to turn. And next thing you know, it's another $1 down. And you're like, oh, well, you know what? I'm just going to maybe buy some more in dollar cost average. Next thing you know, it's down another $5. You're like, oh, you know what? Maybe I'll triple down on this one because I just know this is a great company. That is what kills you. That will destroy you. Remember that phrase that says markets can remain irrational longer than you can remain solvent. Markets will do whatever the hell they want to do. Do not put your opinion in front of it because it will prove you wrong. So as much as I love that question from Anon, that's my easy answer, right? It's very easy answer. I lose a lot, but my losses are, sorry, OG. They shouldn't be painful memories. They should just be tough learning experiences, right? You got to learn from all that stuff. All that stuff. That's right. Good day for that. Where's Northside Trade? Oh, there it goes. Added Tesla today with 5-to-1 ratio on the short side. Awesome. Great. But again, you got to be careful because Tesla is one of those ones that can move up so quick. Just as long as you stick to your stop loss, you'll be okay. The big blowouts are the ones that ruin everybody. So here's let me continue on with this second part because it said, how often do you lose? And I lose all the time. It's fine. I didn't lose. I've lost today just a little bit, but that was more of a hold position trade. I've been trading my own since September of 2021. Since then, I lost around 1% of the $10,000 by January. Since January 1st, I have made most of it back, but this month, February, I am down. Is this normal for a trader? You get up, you get down. I have found I do really well with currencies and interest rates. I really suck at equities. I'm working on equities, but trying to find out what to watch for. So before I finish this last sentence, if you know and you've done the research here and on, and you say, hey, your opinion doesn't matter of your performance. The only thing that matters is at the end of the month or week or year, you can look and say, I'm making money on this. And whatever that is, stick to it. So you said in here, I trade really well with currencies and interest rates. Then stop trading equities. And I know you want to, but if you know that that's what's making you money, focus on making better decisions with your currencies, refining those trades so that the whatever your success ratio is, that ratio gets better, that your winners get bigger because your trade management gets better. So I would stick with that. And then maybe in another account, very small, just dabble a little bit in equities and maybe try to figure it out. But don't make that your focal point. Your focal point is to make money as a trader. It's definitely to make money. Now, last sentence. But I guess that's what is frustrating me about the markets. I won't give up. I just feel like throwing my computer out the window sometimes. We used to call that playing Scrabble. So back in the old days on the trading floor in Irvine, you got 180 traders, and a lot of them have significant, let's just say, attitudes, adrenaline flows. And we used to, take your keyboards here, and sometimes you just start so upset you start punching it. And Scrabble is when the keys would actually break off and start flying around the room. I'm guilty of that. I actually have probably a couple scars on my knuckles, but you realize why are you getting that worked up over it? The only reason I would get that worked up is because I would lose a lot of money, which means I violated my discipline or didn't have rules to begin with. So now that I have rules in place, the only time I get frustrated is if I lose big, and it shouldn't happen because I'm disciplined. And I think that that's the main focus we should all have is how do we make our discipline as rock solid as possible? Nobody here is, not one of you wakes up every morning and says, oh, man, I'm looking forward to losing today, right? It's not what we do. But I also have a part of me that says, I'm okay to lose today. I just can't lose a lot. I can't give everything I've worked for back, right? I can chip away. If you look at, Lori, too much testosterone. If you look at the analogy I've used before with everybody here, which is of Derek Jeter of the New York Yankees, who is one of the best pure baseball players of all time, even though I hate the Yankees, he was amazing. His lifetime batting average was .315, which means he's failed 68.5% of the time. He's either struck out or popped the ball up. When he does, what does he do? Oh, well, goes right back to the dugout and says, I'm not worried because I know I'm going to come back and do the same thing I do every time because I've been practicing swinging my entire life and hit the ball next time. Because I'll know I'll get it eventually. For us, it's different because as a baseball player, the strikeout or the pop-up is the worst thing that can happen to you, right? You just pop it up, oh, it's an out, great, inning's over. That's the worst thing that can happen to you. For us, though, it's up to us to create what the worst trade is or what that destiny is for us. I mean, you can keep throwing, and it's almost like a Billy Martin. For those who are a little bit older, you remember Billy Martin, he would just kind of throw these tantrums, start throwing things. I mean, imagine if a baseball player, instead of just striking out, got really angry and just took the baseball bat and just started swinging it as hard as he could at the umpire and the other players. It would ruin his career, right? That's like us in a bad trade. It should just be a strikeout, took a small loss, move on to the next trade. But so many people lose their cool and they blow it and they start doubling down and trading way bigger share size and just holding overnights, whatever, and violating all the rules. And then you're ultimately out of the business. So anyway, sorry for the rant. But that's it, Anon. If you ever meet somebody, ever, that tells you that they don't lose, they're lying. Period. Right? There's not one person in here that can tell you that they don't lose. And if they do, it just tells me that they're not trading or you've never traded. Right? So don't get discouraged. I think the biggest piece from what you've told me here is if you said you trade really well currencies and interest rates, then just stick with currencies and interest rates. If you've got some timing mechanism there with currencies and interest rates, great. Now, could you be trading options on the futures? So if you've really timed what the euro is doing or the yen or the pound, and you've got that down, now maybe you want to look at something else, like using options on those futures products. That could help maybe further expand your rates of return or your success ratio. But that's something to experiment with down the road once you, lock down what works for you. I think sometimes people think they have to do everything. I always encourage people to take as many classes as you can. Take options, futures, Forex, take cryptocurrencies to find what really resonates or gels with you, what you like the most. And then from there, you start exploring and digging deeper into those topics. Exactly. Oh, McEnroe, yeah. But, look at that market. It's a good example of McEnroe, right? It also made him famous and one of the most iconic baseball or tennis players of all time. I love McEnroe. Tony Gwynn hit a lot of singles. Tony Gwynn, for me, is one of the best pure hitters. Of course, I'm more of a West Coast guy, so Tony Gwynn was absolutely incredible. Tony Gwynn, Wade Boggs, Cal Ripken, those are kind of my idols. Derek Jeter, just because he stayed with the same team his entire life, his entire career, and he always did great, always in a clutch. Lori says, I usually do well with options, but skip futures. Great. I think the eye-opener for most should be, what is it that you're doing? Now, you could take a class with somebody or hear some guy online. I mean, hell, I can go to YouTube right now and type in how to trade stocks. I'm going to get 1,000 different people that claim to be the greatest traders in the world. Well, I'm never going to make that claim. I'm just a guy who trades. Sometimes I'm great. Sometimes I'm bad. Sometimes I'll have losing weeks. I try not to have losing months, and you definitely don't want to have losing years, period. Right? That's just, if you are on that path, it's all about evaluation, knowing where you're sliding and how to stop that slide. When I was younger, I would go a little bit too overboard and try to revenge trade or make all that money back the next day. Forget it. What happened. Learn from the experience and move on, and hopefully get back to what works for you. Lisa, what'd she say? Merlin, can you repeat what you said towards the beginning of this session about buying puts now on the market and the market taking it? Yeah. So, sorry, I got something in my eye over here. Damn, that one hurts. Let me go to a stock. We had a gentleman who was saying you bought some puts on Tesla today. Great. Tesla's great because you had the breakdown. Broke down below that low we saw back on January 28th, which is pretty much the same thing as a lot of the markets. So Tesla at this point is bringing that market down. Personally, I thought it was really stupid to be adding that to the S&P when the market was so high. But hey, I'm not the guy who makes these additions. So let's just say that you thought, I guess you could give me an example, Lisa, like what do you think is bottoming out? Is there something you look at and you go, oh, here, how about Robinhood? Wah, wah. So let's say you're in Robinhood and you're like, oh, this thing's bottoming out. It's going to bounce. And that was the initial comment, was saying that, it's bottoming out and I want to buy puts at the bottom. Well, that you wouldn't want to do that. So if you were going to buy puts, that means you think it's going down. You wouldn't want to buy puts at the bottom because all it would take is a small move up and your puts are worthless right away. Good luck. If anything, if it gets down near the bottom where you think something is bottoming out and this is the turning point, that's where you're going to be looking to buy calls. So that's what I was making a point of, Lisa, is saying, it's about market timing. And in a situation like Robinhood, even though, puts would probably be the best way to go here, it's pretty low. Now, how much lower can Robinhood go? Obviously, 0 is the ultimate one. But, if you got something that's bottoming out, let's see if I have any other indexes here. I'm going to go to or at least you think is bottoming out. Let's see, not energy. That thing's doing great. Here's an example. This is XLV. This is the healthcare ETF. So you look at it right now. It's basing, or actually, it just came right into this area of consolidation we saw from late January. It's bottoming out. Do you buy puts right now? Probably not, because the odds are fairly decent that this is going to bounce to the upside. Just because it's at this demand zone, or right near, it's actually what they call a level on level. You've got this little area of demand that goes back to January, then you also got one that goes back into October and September of last year. So, buying at a point like that, buying puts, which basically mean you think it's going down, when it's pretty much at the low point, that's risk. At this point, as Big Eb says, maybe selling puts. Yeah, why not? You could sell, let's say you sold the 125s on XLV right now. All right, so you're selling the 125 puts. That means you're collecting premium, and if it gets down below 125, you are now going to be exercised. Okay, you're probably going to get a pretty good premium for that because it's so close, but all you have to do is put a stop loss down below it, and let's say if it gets to 124.20, you dump it and take a little bit of a loss. That's the mindset. And buying puts when something is at a demand zone is the wrong choice. Selling puts would be better. Same thing if we look the other way around. Let's look at gold. Where's my GC chart? Here's gold's chart. Right? Look at this price chart. Is this a situation where you would want to be potentially buying calls? I don't think so. I think right now, if anything, you'd actually be thinking of buying puts, because it looks like it's going to hit this overhead supply and sell off a little bit on gold. Now, at least this is moving to the upside, so any break on this, yes, I'd be looking to potentially buy some calls, anticipating price moving up further. But, when you're at a supply zone, buying calls is a risky proposition. What else we got? Could Tesla come all the way down to 500-ish? Could it? Sure. And one thing I've learned, if you ever say, could this happen? The answer is yes. It doesn't matter what you're going to tell me. Could this happen? Yes. There's never anything that's absolute. It's always potentially. It's just what's the probability of it happening. So you mentioned $500 for Tesla. That's down here. Could that happen? Hell yeah. Absolutely could happen. I mean, look where we started. Back in 2020, Tesla was at $70. And now we're debating, is 500, too low? It could go all the way back down. Now, I don't think it will. I'll tell you this: if Tesla does get to $70, I'm going to load the boat. I'll be buying so many options, call options on that one. Buy some leaps on Tesla. But anyway, there you go. Gallo says, have to get educated before trading options. Yep, I agree. Options is one of the more challenging ones. It's got a language all of its own, and there's so many different strategies. I am not a good options trader. I like to do just simple directional stuff. Don't really do spread trades. I know there's many of you here doing iron condors and things like that. Awesome. I just got too many other things on my plate. For XLV, I'd look to pre-lockdown pricing. I would agree. And the main reason for that is, a lot of these healthcare companies are great because of COVID, right? Great because of COVID. So what it's like when it's not juiced by big government's money like never before. Totally agree. So you go pre, where are we talking? We're talking back in here, which would be the 95 to, let's say, $100 mark. And you're at 126 right now. We're forming a similar picture that I was drawing on the S&P 500, right? I mean, can you guys see the head and shoulders here? It's the same basic picture. Let me just draw it for you. There's your left shoulder. There's your right, or your left shoulder. There's the head. And I'm a pattern person. I know some of you guys hate patterns. That's okay. I like them. But this is a great example of a head and shoulders pattern. And, when we get down to this neckline, question is, how far does it drop? Well, let's measure from the neckline, head to the neckline. That puts a target on XLV right around 107. So that kind of puts right up to your numbers, right? A little bit higher. John MacArthur? No, I don't know John MacArthur. Rob, SPCE. What did you say on that one? trap trade today? Well, I don't know if it's necessarily a trap trade. I mean, this is just one of those just spikes. And again, if you look at I don't have volume on here. I just want to throw volume on here just to get an idea of how much volume has transacted. Now, this is on a 5-minute basis, and you can see pretty much that you had the gap on the open, the gap and run, and then they've just created ever since. So I wouldn't really attribute this to much. This could have been anybody just doing a really large order on the open and market makers filling that, and then the rest of the day just giving it all back. So I don't know if I would necessarily call that a trap trade. I'd call this a crap trade. It looks to me like space is dead until it starts to get out of this sideways funk. All right, I did not have any time to go and look at your economic calendar and earnings calendar today, so I will just. There was some big names coming out. So let's see, Forex. We didn't have anything for the equity markets today, but I will just bring up the calendar and share it with you guys. So here's what's cooking for tomorrow. I'm not in currently Corey's class, but he's been on this program a few times, and he's a great instructor. There's so many good instructors out there. It's the key is really to find the ones that you resonate with, as I mentioned before. So here's what's cooking for tomorrow. We do have preliminary GDP. Remember, preliminary is the second one. There's advanced is the first, preliminary, and then it goes to all these other ones. So we already have an indication as to what that GDP number will be for the U.S. That's going to be at 5:30 Pacific time, which means an hour before the equity markets open. They're expecting GDP to increase, which should be no surprise. They're expecting a drop in unemployment claims. But the fun stuff, I think, is going to happen when the markets open. You've got natural gas storage and crude oil inventories happening as the markets open. Natural gas is 1 hour into the day, and crude oil is an hour and a half into the day. You also have new home sales, which they're expecting that to tick down. Keep your eye on things like Lennar and Toll Brothers. The more we see bad home sales data, the more likely Toll, Lennar, KB Homes, etc. are going to start to take a bit of a nosedive. And then for the rest of the world, New Zealand's got retail sales numbers. You have some GDP numbers coming out for the euro as well. And that is pretty much the big story, or the big stuff for tomorrow anyway. Now, on the earnings front, there wasn't a ton of big names today. You had Lowe's, you had Network Appliances. Tomorrow, there's 427 companies reporting, and here are some of them: Alibaba, Square, Etsy. Not Square, Block. But when your ticker symbol is SQ, how can I not call you Square? Occidental Petroleum, Dell Technologies. Those are some of the big names reporting. Now, somebody asked about, was it Baidu or Alibaba? Let's bring up Baidu's chart and Alibaba. Okay, so there's that one. Tom, I hope we brought this one up. I call this the Tom Special. I'm just keep extending this box out. We're still stuck in that giant sideways range. Awesome. Some good opportunity. What up, Don? Good to see you. And then you got Alibaba as well. Same thing. Baba's looking a little bit worse, obviously, because it's sitting right near the lower end of that range. And I mentioned this one yesterday. I am a fan of Alibaba. If you want to get something made, that's the place to go. I hate to say it, but I'm definitely a support America person whenever I can. But to give an example, one of my favorite things to do is to make costumes. Yes, I like to make costumes. I know, I'm weird. And a lot of the stuff that I want to get it made here is extremely expensive. So, for example, I wanted these hexagon pieces that were about 1.5 inches in diameter, mirrored 1/8 inch, or actually 1/16 inch plexiglass. Just to buy one sheet, which is a 4 foot by 8 foot sheet of plexiglass here from a manufacturer in the United States, is going to cost me about, a couple $100. Then I have to find someone who will laser cut that stuff. So now I'm looking at another couple $100. I'm looking at $400. I got 2 full sheets of laser cut hexagons from China delivered to my door in big bags. It cost me like $50. It's hard to compete when you're looking at $400 versus $50 for the same services. So Alibaba, I've also done all kinds of stuff from China, and these bikes obviously come from China as well. So Alibaba to me it says full of scam companies. It is. You got to do your due diligence. It's like looking at cryptocurrencies, right? Most of them are scams. Do your due diligence, call them up, talk to them, check the reports. So that's how I got involved with this company I'm with now, and I love them. I mean, they're awesome. Call me all the time, trying to give me special deals on bikes. Anyway, that's going to do it for me for today, everybody. I got to run. I got too much stuff on my plate. By the way, for those who are in the CIL program, last night in the CIL, we were trying to create our own cryptocurrency, and something happened, and for the life of me, I couldn't figure it out. it was such an easy mistake. So I actually recorded a video today. I'll post that in the CIL room. So for those who are in the CIL, and I'm also going to start off tomorrow's session with 10 minutes just to rip through and show it all, because it's actually very, very cool and simple in creating your own cryptocurrency. So at some point, I'm actually going to look at trying to provide liquidity for this cryptocurrency, and I might actually have the TraderMerlin coin, TMC. Zed wants to know about Facebook bottom. You ever watch the Olympics? One of my favorites, just before I was going to wrap up, but Zed says Facebook bottom. When I was younger, the Worldwide of Sports, or ABC's Worldwide of Sports, had a commercial that was the thrill of victory and the agony of defeat. And in the agony of defeat part, there was this skier, I think it was a female skier, I don't remember, but she went out of bounds, caught her ski on the sign, and was just flying. Right, and then they see her hit the ground, she's just sliding. Now, a lot of people they probably pulled that commercial because it's pretty graphic by today's standards. But if you look at what's going on with Facebook, this is that skier that crashed and fell face first. And they're just going to keep sliding until they get to the bottom of the hill. Now, I don't know where the bottom of that hill is. We could look over here off to the left-hand side and maybe try to, I don't even want to look at where current price is, right? Just look in the middle of this stuff right here. Is there anything in here that you look at and say, man, that's a great demand zone? I don't. If anything, there's one little spot right here about 157. Other than that, I'm thinking it's going to come all the way back down to the 146. It's just ripping through demand zones left and right. And you look where we're at right now, we got a ways to go. So, was it a ski jumper? I thought it was someone doing the giant slalom, Margaret. But anyway, it was... it was the intro to it. Oh, so brutal. It's just savage watching that. But I feel like that's what Facebook is right now. I wouldn't touch it. Right now, for whatever reason, and we could show all kinds of factors as to why it's going to keep on going down. But what I would encourage anybody, especially like Zed, we look at something like Facebook, and what happens is people go, oh my God, it's $198. And man, it was $384. This is Facebook we're talking about. It's going to get back to $380. So if I buy it now, I've got a double. I can double my money if it gets there. Well, I don't think it will. I think that this is the fall from grace for Facebook. They're not going to disappear totally, but their market dominance, their acceptance, you look at Gen X, or not Gen X, millennials don't use Facebook. The new generations aren't touching Facebook. They're going to other different social media sites. So hopefully Facebook will buy those companies, right, and survive that way like Instagram. But I don't know. I wouldn't touch it. If anything, I'd be thinking about buying some puts on it just because. But it looks like it's going lower and lower and lower in my book. All right, everybody, that's going to do it for me. I got to wrap up. Thanks for joining us today. Again, if you have comments, questions, feedback, put them down below the YouTube video. That always helps me. You can also email me directly at TraderMerlin@gmail.com. That's the way to get questions answered on air, but I give priority to anybody who does them on YouTube. That just helps me out as well. So thank you guys so much for all the support. I'm going to go to the gym and get... a nice relaxing rest of my day. Have a fantastic one. Hopefully we'll see some more follow through from this breakdown. I'll see you tomorrow. Take care.